Hi, welcome to the Market Alert for Wednesday, the 25th of September 2019. Today we're going to change focus, start off with Bitcoin, as there seems to be a bit of a bloodbath from yesterday, and let's have a look at the detail. What I'll do then in the second half is focus on also the down move in the Dow. A lot of exciting things happening at the moment, and then of course the pound rallying on the Supreme Court's decision yesterday as well. But let's start off with where the main news is, and that's with Bitcoin. Yesterday, this is the daily chart. We have already determined that the market is short in the 4-hour and the 15-minute, and yesterday we saw the market go straight through the 97.16 level, also the recent support, and look where it traded down to, the 200 bar moving average. So price is finding support here. Failure to do this will see this market continue lower, and what I'm going to do now is just draw in some extensions from over on the left there, so you can see where the market is likely to find support should it break the 200 bar MA there. Let's just get rid of a few things here. Right, so there we can see if we break the 200 bar moving average, then we will be short as well, and these will be the downside targets. If we look at the 4-hour, you can see now that we were already short on the 4-hour market below the 200 bar moving average, and all three averages in the right direction. And we had a big sell-off yesterday. You can see the market with the volume and then the profit taking as prices came back. What I would be inclined to do here is to test the support for this market. I'm going to use the retracement tool. I'm just going to click twice below the low, 76%, the 200 bar moving average and the 76% retracement drawn in the right places are incredible and powerful tools. So what I'll be looking for is to see if the market will find support here and then start to move off. And if not, then it's likely to just sail through. And then, as in the daily chart, we'll be looking for the market to take this out and continue lower. So intraday yesterday, I was having some fun. The market started to move a bit, and just have a look here. We've got the first trade with the market moving lower down to the scalp level here, and then bouncing back a bit. One thing to keep in mind here before you start trading any market is to actually have a look and see where all of the averages are. So we're short markets below the 200 bar moving average in this time frame. The 4-hour as well, it just wasn't short in the daily chart. So the first trade here, we see the market trading down to the scalp, and then we get, just drag this across a bit so you can see it, and then we had a second trade also, and this one continued to make lower highs. Again, simple tools and techniques that you can use. When a market's making lower highs, there's no reason to panic. It's just a case of moving the stop down and just trail it above the lower highs. Once you've got below the scalp, we then move the stop to break even. Delete this, and then you just trail the stop down on the highs below this, so you can just see there. And then eventually the market is taken out, as you see the profit taking coming into the market. And then this is not new buying, this is a futures market, so you're seeing the futures contracts being bought back, and then prices moving higher, or sideways to higher in this case. And they trade back, fail to break the 200 bar moving average, and then we get another sell signal, and the market just falls out of bed there. You can see exactly what happened, and it continued lower all the way through And at the moment, if you were holding this trade, which given the volatility I would advise against, but if you're sitting at break even and then you've trailed the stop, this putting a stop on this bar is going to send it higher, so there's no point. And then you can see as it's moved its way, it's sideways to higher. The thing to note as well, which we've spoken of many times before in different markets, is that if you go through the S3 pivot, then the market is likely to find some support, so take the money off the table. So this market down significantly yesterday, big shakeout as we've seen in the daily chart. And then overnight, prices have just meandered, but they're sort of rounding over at the moment. So just like the other time frames, I would be inclined to have a look from this low to the overnight low and see where prices are likely to trade. So I'm just going to drag this across and we can see where we are. So watch this level and also watch for prices closing back above the 20 bar, back above the 50, but watch resistance at these levels as well. So if the market comes up, we just the market trades up to these levels and then turns and goes back through either of the 50 or the 20 bar. We're short already because of the 200 being above. Then we could expect to see the market trade down to the 76% and yesterday's low, and then onto the S1. So just to recap with Bitcoin, I say a lot going on. Watch yesterday's low. Watch the 200 bar moving average in the daily chart, because if this is taken out, then we're going to continue to the downside. No doubts about that. So big shakeouts going on in this at the moment, but it's great because it's brought the volatility right up in this market. Okay, that will do it for this one. We'll move on to the second part now. I've looked at the Dow and the pound action for yesterday. So yesterday's down move in stocks was all about the prospect of Trump being impeached by the Democrats. This caused a bit of a slump, and then we saw the market move back to the upside. So let's have a look. Well, come off the lows. So starting off with the daily chart, we've actually got some selling around for yesterday, which is interesting. Prices currently finding support at the 20 bar moving average and sitting back on the 76% retracement from this high to the low in August there. So what we're looking for now is prices to move back to the upside. They want the prices on the high. It's going to be interesting to see if they can maintain this, or we're going to have some sort of correction. So again, using the 76% retracement drawn from this high to this low, I'm going to draw this in and watch for prices if they bounce to this level. We've also got this 76% retracement here as well. A break below the 20 bar moving average will also see the market start to break down as well. So again, trade what you see as it unfolds, but always look at the variables of what could happen. In the 5-minute chart for yesterday, we can see, just drag this over, that the market broke through the 200 bar moving average and then continued lower. The buy side failing as prices were just hammered to the downside there. But then we did have a clue that we were under pressure with the market closing straight through all three averages with professional selling bar there, which you can see huge volume there. And then banging its head against the 20 bar moving average until we got down to the evening part of the session, and they managed to get out the big guns, the plunge protection team coming into the market and moving prices back there. And from this low to, actually if we do it the other way around, if we measure from, because the low and the high are all in the one bar, so 2 clicks at the bottom with the retracement tool will take you over to 76% retracement there, where the market's found some support and moving higher. stopping at 76% here, which you can see, and then going through it. And overnight, the market currently struggling with the 200 bar moving average, traded through it, has been knocked back at this point, and also struggling with the DP level as well. So just to recap here, you can see the evolution of the trading strategy. By using the 3 averages, you can remain short and wait until the markets switch before you consider the long side. So yesterday, the market moving to the downside. Today we've only got crude oil inventories out at 3:30. So again, the market's going to have to make its own mind up what it's going to do today. Meanwhile, in the implied volatility, you can see that this is kicked up as well. We've turned orange or amber in the implied volatility. The market at the moment holding at the 20 bar moving average, which we've just seen. But certainly a bit of weakness around here. They're marking up the options in the event that we could see prices move lower. And there you'll see the increase from 13.85 to 15.12. Also, yield curve continues to invert. Recession on the way. As I've said to many people, we've had recessions without an inversion yield curve, but we've never had an inversion yield curve we've had a recession. So again, this is already ringing alarm bells, and has been doing since way back in May of this year, and it still remains inverted. Also, banking problems, of course, with the overnight repo, and the money still being printed at 75 billion a night. And this, you can see, it wouldn't necessarily directly impact Deutsche Bank. But the reason for looking at this is just to see how close we're going to get to this 640, where Charles Nenner said if we hit $640 for Deutsche Bank, we'd have all sorts of problems. And then there's the market currently trading at the 200 bar moving average. So again, we've used the 3 averages that we use in the other markets, or just the 2 in this case, because we're not trading it, we're just looking at it just to get an idea of where the market is trading. Most important one, the 200 bar. Market's currently sitting at this level. Okay, that will do for this one. So a lot going on. And actually, I've forgotten about the pound. I'm talking about a lot going on. Yesterday, as we spoke in yesterday's alert, waiting for the Supreme Court. No surprise that they found in favour, as they seem to be Europhiles. And you can see the reaction. The market going up, trading through the 200 bar moving average, coming back first, finding support at the DP and the close, and then trading higher. However, now the euphoria is out of the way, the pound drifting back to the downside. Watch the 200 bar moving average today. I think they have to resume Parliament today or something. Like I say, I don't do politics, prefer economics. No money, you can't carry through any promises that you have in a manifesto. Understanding the money is far more important than the politics, in my opinion, because they never deliver on anything. And when you understand the debt cycles and everything else, you can understand exactly why you never get what they promise. So the 15 minutes chart above the 200 MA needs to close back above the other 2 if it is to move to the upside. So again, we'll see how that pans out. But longer term, at the moment, the market's had a bounce, having tested back in early September, is moving to the upside there at the moment. Be good if it actually traded up to the 200 MA, found some difficulties, and then traded back to retest these lows for a really good trade as well, like it has done in Bitcoin. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.